Walmart comes out with expectations that disappoint the market, to say the least. And the market went down, S&P 500 down by about 450 points. We're going to go over that, and we're going to go over exactly what Walmart said about the customer, the consumer, that really spooked markets going into 2025. So let's start by looking at what's going on with Walmart and what they reported today that really got the market spooked. So Walmart shares drop as retailer says profit growth will slow. And remember, Walmart is kind of used as a proxy or a bellwether for the consumer and the economy. But I think a bit in the wrong way, because if Walmart is doing really well, I mean, that could be good for the economy, but it could be a bad thing, meaning people are just trading down. And if Walmart's doing poorly, then that could mean the economy is really, really suffering, in really bad shape. Or it could mean the economy is absolutely booming and people, instead of trading up, are actually, or excuse me, instead of trading down, actually trading up. Walmart topped earnings as revenue estimates for its fiscal fourth quarter, but said profit growth will slow in current fiscal year. This is the CFO, John David Rainey. And they said that they would not be immune from looming tariffs on Mexico and Canada. You know, they kind of always use that. I mean, maybe they'll definitely be impacted for sure. But even if they weren't going to be impacted, I think they'd be using that as an excuse instead of coming outright and saying the customer is waving the white flag, because that would really, that would spook the markets even more. And obviously, the last thing they want to do is have their share price go down by even more than it did. Walmart saw strong gains in its e-commerce business and membership programs. So let's get down to kind of going over what exactly happened with the share price and what their expectations were. But I want to focus on what they're saying about the American consumer. So keeping tabs on the American consumer right here. Since Walmart is the nation's top grocer, investors often view it as a barometer for consumer health. Investors have tried to parse whether softer U.S. retail data in January, so we're rewinding a bit, the data, retail sales, was a lot softer in January, not just for Walmart, in general, were a blip or a warning sign. Wall Street also is trying to understand the potential impact of policy decisions such as tariffs on consumer spending. Restaurant chains, including restaurant brands, Burger King, Popeyes, said sales improved in the fourth quarter, but they also had weak trends in January. Yet those, you have to think that a lot of this could have been the euphoria from Trump winning, and everyone's thinking it's going to be amazing, sunshine, rainbows, unicorns, and then they wake up with a bit of a hangover on January and say, yeah, I'm still super excited that Trump is in office. I'm excited what Elon is doing with Doge, but I still can't find a job. And then the reality sets in after that honeymoon phase. I'm not saying that's what's happening, but I think it's possibly something that's happening. It's a question we should be asking. Yet those restaurants and some retail experts have blamed short-term factors, winter storms, consumers taking a break after splurging after the holidays, contending with damage from disruption of LA wild. Okay, come on. they always blame the weather. They always blame the weather. Or look at this. They're blaming the splurging on the holidays as if this holiday season they splurged even more than they normally do. I mean, isn't that pretty much the same thing that happens every single year? And by the way, if they splurged that much, then how on earth were retail sales softer than what was expected? Oh, they are softer in January. Okay, I take that back. But again, I think that's something that the analysts should have known, that, yeah, we're going to have a little bit softer sales in January due to this something that happened, I don't know, every single year called Christmas. It's not like that's, oh my gosh, what is this December 25th thing? Oh my, who could have seen that one coming? Rainey, the CFO, echoed those sentiments on a call with CNBC. Okay, got it. Even so, big box retailer faced many questions from retail analysts on Thursday earnings call about the reasons for its conservative forecast. So again, this is kind of what's spooking the markets. When projected operating income growth 4 to 6%. Okay, got it. We're getting into the nitty gritty here. Here's a quote. We have to acknowledge that we are in uncertain time. and we don't want to get over our skis. And that was a CFO, I imagine. There's a lot of the year to play out. Again, we feel good about our ability to navigate the environment, whether it's tariffs or other macroeconomic uncertainty. In other words, the consumer. And whenever they're talking about macroeconomic uncertainty, that means they're worried about a recession. So let's shoot over to how the markets responded. Like I said, we got the Dow down 450 points, S&P down, as far as percentage terms, a lot less, 26. And then NASDAQ right about the same as the S&P 500, down about 50 basis points or so, 47 to be exact. Bonds, as you would expect, 10-year Treasury yield comes down on that data because it is seen as though it's, potentially an economic softening, and therefore the higher. You know what's really interesting, though? Wait a minute here. Now that I'm just thinking about this out loud, why did the market go down? You say, George, because this was softer economic data, which means the consumer might be pulling back because of Walmart. Remember, that's what you just said. Exactly. But that means that the Fed has a higher probability of decreasing rates, maybe more so than we thought just this morning or yesterday, and therefore lower rates. Why is the market not going up? Weird. It's possible. I don't think this is what's happening, but it is possible that this is the narrative starting to shift, where instead of bad news being good news, because, oh my gosh, the Fed's going to drop rates, woohoo, maybe bad news is starting to become bad news. Who knows? We'll have to really pay attention to this, because if, I think I'd like to see a chart of the 10-year Treasury yield and basically the S&P 500 over the last 3 or 4 months. And my guess is they would be tied at the hip. So this is the first time where, and I don't have the charts in front of me, but I would guess this is the first time where you've seen a significant divergence, where 10-year Treasury yield going down, not much, but by 3 basis points, and the Dow going down, 450 basis points. Although, granted, the S&P and the NASDAQ didn't go down by much. Although, again, now that I'm thinking this through, if expectations are for lower interest rates than what was baked into the market yesterday, that should really move the NASDAQ higher, because that, you would think, is the index that is most sensitive to those interest rates. Or I should say, those are the stocks that cumulatively are more sensitive to those interest rates, because they're considered the quote-unquote growth stocks. What happened to gold? Up on the news. Okay, that's no real surprise there if we've got expectations for interest rates going down, although it could be noise. Bitcoin up, which is what you would expect, which is, again, weird why the NASDAQ didn't go up as well. And then oil up, which, again, probably noise. I doubt that's really playing into what's happening with Walmart, or what Walmart is doing is playing into the price of oil. Hey guys, I'd like to personally invite each and every one of you to attend this year's Rebel Capitalist Live. This is the incredible conference I put on annually that helps you build a bulletproof portfolio. It helps you increase your personal freedom and liberty, and also it helps you increase the size of your network. In other words, you get to meet a lot of like-minded individuals, fellow Rebel Capitalists. It's in Orlando, May 23rd through the 25th. Past speakers have included people like Robert Kiyosaki, Ron Paul, Peter Schiff, Mike Maloney, Lynn Alden, just to name a few. So to get your tickets ASAP and to find out who is speaking at this year's Rebel Capitalist Live, you can check it out at rebelcapitalistlive.com. And just a little quick insider information, if you get your tickets sooner than later, you can get a discount, because as we get closer and closer to the event, the tickets go up in price. So don't wait. Go to rebelcapitalistlive.com right now and get your tickets, and I will see you in Orlando, May 23rd through the 25th.